or organizations that may not be directly owned, managed, or controlled by the real estate life. All credit decisions, including loan approval rate and APR, will vary based on your specific loan request and credit profile. The information provided on this show is merely to allow the listener the ability to become more familiar with such potential opportunities and to obtain more detailed information on the suitability of such opportunities to the listener's personal and financial situation from the companies, entities, and/or organizations involved.
A new home you've dreamt about for years, and there's only one thing standing in your way: getting a loan. Rest assured, United Mortgage Corporation of America is here to help make your dream a reality. Get answers, get results, get the service you deserve. What kind of loan do you have? Call now at 888-LIFE-980. That's 888-5433-980. Or go to the web at yourrealestatelife.com and take action today.
Welcome to Your Real Estate Life. It's your day in real estate radio. I'm Michael Harris, mortgage loan originator 233410 with United Mortgage Corporation of America, NMLS 3189. You can visit our radio website at yourrealestatelife.com or get started at unitedforloans.com. That's unitedforloans.com. We are for loans. We're just not for the money or the interest that you're spending. We're trying to save you interest. We're trying to eliminate that debt in the most efficient way possible. And thank you for joining us today and listening to us on Fox Sports Ventura 1590, 94.7 FM, KBTA, and our K-Earth audience on Sunday morning at 7 a.m. here on the West Coast. Our show is streaming on Your Real Estate Life on YouTube, and you can also catch us live on LinkedIn. We're making some dents. We got some viewers. We got some subscribers. We're getting our audience put together. But I've been on the air now 19 and a half years. 19 and a half years doing radio. And I've been in the mortgage lending industry now for over 38 years, starting in year 39. So we'll talk about that a little bit. And I've had a lot of experience. I've seen a lot of things. I've walked a lot of paths that hopefully you don't misstep. But we look at the markets. I mean, we had a lot of numbers this past week centered around employment. The ADP number that came out, weekly claims. We had the Friday employment numbers. I mean, we had a lot to digest as we're getting caught up on some of the data that we weren't getting when the market, or not market, but the government was shut down. So when we looked at Friday, a lot of it then revolved about what happened the day before. Now, we had a lot of stuff. I mean, on Thursday, we had President Trump directing Fannie and Freddie to purchase $200 billion. Now, they're saying that's not a lot. I guess any billion number is a lot to me, personally. But $200 billion of mortgage-backed securities to assist maybe in real estate or the mortgage markets, maybe trying to get interest rates down a little bit, maintain values, make a little bit more affordability monthly, but you still have that interest footprint. We'll talk about that later in the show. But on the employment situation, we saw the data kind of suggesting that the employment remains okay. And the unemployment rate did fall back to 4.4 from the 4.6 that it went up to in December. So the rate cut, we're not going to see it. We're not going to see the darn thing. So we're not going to get the consumer rate cut we want or thought we wanted to like a 4.6% chance that we're going to see that now on January 26th. And even the March 18th meeting, it's 28.1%. And if we go all the way up to the April 29th meeting, we're at 42%. Holy cow. I mean, we're seeing some marginal moves, though, in the mortgage market because the spread is going down. Historically, it's about 1.7% on our spread, with the mortgage-backed securities going up above in order to get interest rates. Now, as I said, mortgage-backed securities, it's not the things that we see publicly, but it's the stuff behind the scenes. So as we look at that spread going down just below 2 now, there's room for another quarter to 3/8 here. So as we start seeing 5.99, we start seeing 5.75. Now, depending upon your credit score, your loan to value, and what you have personally going on, we'll see those results. I have a client right now, we're closing at 5.198%. Yeah, but it's costing a pretty penny to get there. But it was worth it to her in this case. So we are doing that. So we have another gentleman who's doing a loan. He currently had a loan that he had at 6.99, another one that was at 6.5. Now, those aren't bad. Recently, very good. But now, for no points, I'm going to pick up all costs except their interest they normally pay, their taxes that will be due here in California, February 1st, late April 10th, and their insurance. Now, they're not choosing to impound, they pay it on their own, and that's fantastic. So we are going to do a no point, no fee loan, lowering the rates without any loan fees, escrow title, underwriting tax service, flood wire, everything's being picked up. One's an appraisal waiver, one's not. We'll reimburse that appraisal. So for no cost, we're lowering their rate. Now the one at 6.5 is going to save $297 a month. Now some will say, hey, you're starting over. 6 months, 7 months, you got lost it. You're starting over on that amortization. But if they take some savings or they use that 297 and continue to put it at the mortgage, they're going to reduce their interest footprint. Now, there's so much more you can do about that. We talk about that with the Money Max program. We talk about that later in the show. And we do have our live webinar that we do. We do that. We will have that on Mondays at 5 p.m. If you send me an email, interest@aheadformoney.com, I'll get you out an invite and get you out some info. But we'll talk about that later. But I'm looking at what also occurred, and I briefly mentioned it. We had President Trump, he announced on Thursday that he was going to be directing Fannie Mae and Freddie Mac. Now, what does this mean? I mean, this is the mortgage-backed security market, and we're seeing bond prices move accordingly. Interest rates got better. We're kind of at a few years now low on mortgage rates. People are saying, oh, do you think it's going to go lower? It already has. You need to move now. Eventually, $200 billion is going to run out. When it runs out, rates may go up a little bit because the momentum is not there to keep it going. So we're looking at that 10-year Treasury spread to the mortgage-backed securities and pricing, and we're looking at that coming down. Just under 2, it was all well above 3. So now that it's come down, it's time to act. If you have done a loan recently and your rate is 6.5% or higher, you need to call right now. 888-543-3980. That's 888-543-3980. We're watching the employment numbers. We're watching all the inflationary numbers. We're watching everything else, but we have outside influences right now. We have a directive that's going out that we want lower rates. We also had an announcement that occurred in regards to a directive about investors, large investors, not buying residential real estate. We're going to see how that affects things. But again, if you own 100 properties, and they're trying to limit that to keep the inventory there for those who want to purchase. And then if the prices are staying stable, but interest rates are going down, there's a worry that values can go up. Now, that's great if you're listening and you want value in your home, maybe to sell, get more equity. But on the affordability, how much in interest rate lowering to stave off the higher and then stretch it out for affordability? That's where working with an expert is needed. And I mean, you think working with an expert is expensive. Try working with an amateur. I mean, you're not going to get that answer or creativity to the loans that exist, whether it's a low down payment where you don't need 20%. You can put down 0%, 3%, 3.5%. You can get a silent second that's forgivable. There's various programs as such. There's loans that we can do with bank statements, asset depletion. We can use whether you have alimony, child support, separate maintenance in that respect, or you're sitting here getting income coming from rentals. We have the ability to look for a program that's right for you and put you in a non-compromising position that you're not losing it once you're in. Because my goal is to get you something you're comfortable with, not like, oh my gosh, what do I do now? And then you're locked in. You're locked into the house and you can't get out. So my goal is to make sure you have an affordable solution and one that works for you. Again, we have various positions going on with the Fed. We'll talk about that. We got so much to talk about, so little time. I'm Michael Harris. We'll have more after the break.
Your equity position has started to improve? Call about the removal of your private mortgage insurance or mortgage insurance premium and save money today. Call 888-543-3980.
What if I told you everything you understood to be true about money is not?
If there was a program to eliminate most of your interest in your life and pay off all your debts, personal or business, even mortgages, in as little as 1/3 to 1
Someone
month of normal
texted
time
saying
without
that
refinancing,
OG, this is
keeping your
recorded and
life
this is
simple. If
fake.
you want to learn more,
They're watching it and thought I was fake.
3980 and request your information today or email at interest@aheadformoney.com. That's interest@aheadformoney.com.
Welcome back to Your Real Estate Life. It's your day at Real Estate Radio. If you're listening right now, hey, I'm live. I am live doing the show. I'm not going to be sitting there in the chat line. I'm sorry, but I'm seeing people showing up right now. We got Amy Clappett there. We had Seals. We got people showing up and people commenting. And thank you for joining me today. We're talking about your real estate life. We're talking about interest rates hitting below 6% for many, and some maybe it's a tad higher. We're seeing the market. And the average rate's maybe 6.16% in range, depending on the points or fees that you're looking to do and where your credit is. But we're looking at all these items and what we're doing and how that works out well for you. So we're getting that done, and we're doing that live on the air. We're seeing year over year, we had the 10-year Treasury about 4.16. I mean, that's really down from last year at this time. It was 4.69. Holy cow, that sounds really good. We had the 10-year Treasury a little bit better, the 2-year note up 6. We're looking at the Fannie Mae coupon. Now we're looking at the 5-year of the 5% coupon because of what President Trump is doing and buying the additional mortgage-backed securities. We'll start tracking that next week. But we had the Dow up 1,122 points. We had NASDAQ up 435. We had the S&P that was up 108. Gold was up 176. Holy cow. You know, I invested in some gold. I did that. It was a little over a year or so. My gosh, even silver. What that's up, it's crazy. It is crazy how much things are going higher. So we're looking year over year and we're looking at various strategies. And this program is using equity, cash flow, and strategy for your 2026. Now, that can look at a lot of things. We're looking at equity management. We're looking at strategic ways to look at your equity and capital. We're looking at ways of looking at your create liquidity without selling, if that's your desire. We have reducing overall interest paid, as I talked about the Money Max program. We're looking at monthly cash flow, improving your discretionary. And we want to protect you against life and the market disruptions. And in doing that, that gives you control. And the whole idea is having you controlling your money, controlling your finances, and stop letting people take it from you. And understanding what you're doing with it so you can maximize your results. Now, liquidity, it's about flexibility. It's not a matter of perfection. No, it's about flexibility. And, you know, it's not the perfect rate. It's the perfect market. It's not about that either. It's about timing. And it's doing the right thing for you, not everyone else. If you get a 6% rate and you could date the rate, divorce the debt, great. It's to keep the home, marry the home, but you can change these other things. Get the right price for the right reason, for the right result. If you're paying too much in rent, your landlord loves you. You don't need that kind of love in your life. You need to make it stop. If you're paying a mortgage and the rate's too high, you could take that discretionary or that money that's increased. You're not going to start over, lower the interest faster, or use it to more productively to get more return. It's your money. Make it work for you rather than giving it to someone else so it works for them. Make the change. So we're looking at that. We're looking at accessing funds without panic. It's when you need money, you can't get it. So right now, you need to make sure you or look to get an equity line of credit. If it's there available, you can use it if needed, but it's not something you spend because it's there. No, you have it there in case of that emergency so you're not in a panic. You can sleep better at night. We want to restructure your current debt to make it less expensive so we can eliminate it faster. So you might have a great rate, but then you have this whole big balance. You're playing the 0% credit card game, and then all of a sudden you lose and it goes up to 20, 30% because you have no place else to put it. We're going to make sure you have that strategy down pat and something that you don't have to think about, and you're going to pay the least amount of interest possible. I want you jumping over the wall, being on the other side of that debt. I want you to have the freedom to make the decisions on your timeline. You're waiting for perfection. Stop waiting. I mean, you got to have choices, but planning expands those choices, and let's plan right now. Cash flow on properties, it beats speculation and interest and volatility and the cycles. I mean, I want this thing to work perfectly for you. I want to absorb rate fluctuations, reduce emotional decisions making. I want to create staying power. Whether you're a homeowner or investor, cash flow discipline outperforms market predictions every single time. Now, homeowners, we have intentional use of equity, emergency liquidity. Emergency planning is not pessimism, it's protection. Equity-based liquidity allows homeowners to cover unexpected medical events. It allows handling income disruption, avoid high interest consumer debt. The key is to set it up before you need it. Access it always easier when things are calm. And right now, if it's calm for you, it's a great time to find out the equity you have in your home. I can run a report, find out what's going on, the lender's accepted value. It's not just going on some website and getting it done. It's from the lender's perspective. Been in the mortgage industry, as I said, 38 and a half years. I'm in the 39th year of doing this. I like to invoke some knowledge back to you in your particular situation. But we're looking at times when money and unexpected things occur and your access is important. We have lifestyle transitions. We have equity items that change, career changes, business launches, education costs, student loans that are due again. Yes, they're due, and we have many people delinquent. We have divorce, family restructuring going on. We have relocation or caregiving needs. Working with a client now who's a caregiver, and I'm seeing that directly. And some are state paid items and some are not. Rather than forcing a sale or high-cost borrowing, equity can bridge capital during transitions, and it's having that in place. For many, it's about retirement planning, maybe getting started late. It's getting supplemental monthly income, reducing required portfolio withdrawals that you're doing and depleting what you have. It's extending retirement sustainability. People are living longer, so we want to make sure you don't have that issue later on. So it's not about waiting for something better. It's doing something now that's best that costs you least. So that is what I'd like to have you do. Give us a call, 888-543-3980. On our YouTube channel, for those of you who are watching on YouTube, Your Real Estate Life, you could subscribe there. Also on LinkedIn, you can drop me a message there with your information. I'll look to that after the program, or you can send me an email directly, interest@aheadformoney.com. If you go to our website, yourrealestatelife.com, you can subscribe on the bottom of the page. So I appreciate you who are asking about subscribing. So much to talk about, so many things to do. We've been so busy already on the program. And in doing that, we're talking about debt restructuring. Not all debt is bad, but unstructured debt is expensive. I mean, equity can be used to consolidate high interest obligations. We talked about that. You got credit cards, personal loans, you got other items that are costing you more money. And it's a matter of how they're structured, simple interest versus amortized interest. We're looking to improve your monthly cash flow, shorten your payoff times. I was just talking to my daughter yesterday. She has a car loan, and we were looking at the monthly payment, and I asked her how much is going towards principal. How much is going towards interest? Well, this is what I pay. It's going down. No. She pulled up a statement. Well, I've not looked at a statement. It just goes automatically. Most people don't. She pulled up the statement, and there was over $100 plus that was going towards interest. So as she stabilizes her life and gets her career job, she's getting her master's this year, she'll look at maybe paying off that item early and avoiding some of that interest. And we'll look at the math and see how that makes sense based on her rate and the other items. But these are the things that you need to evaluate. We can look at the monthly, the quarterly, the semi-annual, and the annual items, and we can evaluate where you are on that entirely. So what I'd like to do, like to talk to each and every one of you who would like a free evaluation. 888-543-3980. I can help with the debt restructuring as far as the non-lending in all 50 states. But what I'm looking to do also, if the equity line, if a refinance is necessary, I can help you in 5 states: California, Colorado, Montana, Texas, and the state of Washington. Now, investment property, DSCR, debt service coverage ratio loans, I can do that in 46 states. So if I'm not able to help you in your particular state, I'm going to refer you to someone I know who can get the job done professionally. Yeah, there are professionals out there still that can do it. There's a lot of pretenders out there too, so be careful. But we'll look at those options. Now, many say, well, why not I just get an equity loan? Well, you're getting another amortized loan. And when you get an amortized loan, you start paying a lot more interest early with the higher balance and the amortization schedule. And on a 30-year loan, 18, 22 years in, you're 50-50 on your payments to interest and principal. So the goal is to move further down the path. An equity loan is not quite doing that. It's adding to the same mix. So I'm more of a fan of an equity line, a home equity line of credit, HELOC, not HEMLOC, HELOC. So when we look at a HELOC, it adds flexibility, emergency access, and short-term or variable needs. Now, right now, as interest rates are starting to fall again a little bit, we're looking at the prime, 6.75. We're looking at the interest rate. Yeah, it's maybe got a 7 attached to it, but it's simple interest. 7% is a lot better than 52, 58, 64, or 70 some odd, or 84% that some of you have if you look at your mortgage statement. If you glance at your mortgage statement, you will see the breakdown: interest, principal. Now ignore the taxes and insurance. Those aren't really changing if you pay impounds. But the principal and interest, how much of a percentage is going towards interest versus going towards principal? That's the flip that I want to make. I want to get more money going towards your principal rather than interest. And utilizing structure, possibly utilizing equity to rinse and repeat with your home equity line of credit can be in order. I have a perfect financial GPS I can show you. I would have a separate meeting, but I'm a mortgage banker by trade. Been doing this now for quite some time. So as we have live individuals on the air here listening, or on LinkedIn, or on our YouTube channel, Your Real Estate Life, we are talking about planning for the unexpected and planning for what we know, and doing it in a way that's thoughtful and not throwing interest to somebody else. We're looking at plans for people who are 55 and over, 60 in some states, 62 in others. Maybe it's a reverse mortgage or a reverse second mortgage. We could reduce monthly obligations, protect for retirement assets and access rather than money buried in the backyard. You worked hard for your home. It's time for your home to work hard for you. So we can help strengthen based upon not having a monthly payment required on your reverse mortgage or reverse second. So if you're 55 and over, again, we can look at those options. We can actually use that as a planning tool to retire other debt and actually put you in a perfect situation. So depending on where you are in your life and what you have and what you need, we can work on some of those restructuring ideas. And some of them may not even be lending. They could be just restructuring, and I can help you with that. Now, the thing that I want to also look at is the investors. There's investors that buy homes and flip homes, but they're not necessarily the large corporations that are doing hundreds of homes. So what President Trump announced may or may not affect you. But we have loans that are called DSCR, debt service coverage ratio loans, that we're able to look at the property, the income that's coming in from the property to do the loan, covering the costs. So it's easier to qualify. Higher credit score, better idea, sure. It allows self-employed borrowers to get the job done a lot easier. It allows your portfolio to expand without over documentation, because as you file a tax return, and as that time is coming again to pile up your stuff, any properties you acquired or sold, of course, having the right data and paperwork. But bottom line is, you're trying to do that, but you're writing off a lot of the legal expenses you can. So what you show in income may or may not be qualifying. So the cash flow of the property does the trick. So as we look at that, and we don't want to over document a file, we gather, get, close, and do that responsibly. So we're looking at covering the debt, handling a vacancy rate, and absorbing the maintenance, and getting the job done. So cash flow, positive cash flow, gets financing done. Now we got conservative leverage on various items too. We'll look at better loan to values, equity positions, gives us, again, lower interest rates and other decisions we can make, allowing us to reposition if needed. We've had times where we've gotten a rate and lower the costs, and then we look 6 months later, a year later, and we look to then change that rate and save more money, improve cash flow, or perhaps reduce the principal or get rid of that interest footprint. So we do that. Now, I look at the economic calendar every single week. That's an obsession. I'm sorry. It comes out early. So on Monday, on the 12th, we're going to be looking at some Treasury auctions going on, or 13-week bills, 26-week bills. We also have our Treasury auction on the 3 and 10-year note. So we watch these carefully. And with President Trump's announcement, we're going to see short-term and long-term results, and we'll see the mortgage market move. We're going to watch that very, very carefully. So watch that on our website at yourrealestatelife.com. We also have on Tuesday, we're going to have some of the items coming in on wage growth, coming in on hourly earnings and wage growth, some more Treasury auctions going on. So we're going to continue to watch on that. On Wednesday, the producer price index coming out. We're going to watch carefully what's going on the consumer front on the producing side. On Thursday, we have our import-export items. We also have our jobless claims as always. And on Friday, we're going to have, let's see, some of these items coming out. I'm looking at some of the regional items coming out. We've got some inflation items coming out, some results with the Treasury items. I mean, so many things going on, and you could follow that on our website at yourrealestatelife.com. You can catch the mortgage market, what's going on, volatility. You'll see a little item in the corner, talks about where rates are that day. You'll get a little bit of a summary. You can also get our newsletter, subscribe, ask to subscribe, get our newsletter, get on our list. That goes out on Friday mornings. And that will tell you the week that was, the week that's coming, and it gives you an idea, especially if you're advising or giving information, or if you're actually in the market looking and trying to do that and understand what's and why the market's moving. So we look at all this very carefully each and every day. We look at where you are in your life and your decisions, whether you're looking to get started or you're a seasoned veteran. And we do VA loans. Thank you for your service. FHA loans as well. And for VA and FHA borrowers, if you have an FHA or VA loan in the last couple of years, we're at 3-year lows right now. 3 years. 3 years. So with that said, if you've done a loan over the last 3 years, I'd like to talk to you about saving some money. And it's not some gimmick, oh, well, pack it all in there and you'll start over. And no, we're going to look to make this work, and it needs to be really making sense. There's got to be a reason to refinance. And it's not, well, we're going to get break even in about 70 months. And no, we're going to make this happen. So I want to be sure you have the ability to save money. And, you know, sometimes it's one of those, it's behind door number 1, door number 2, door number 3, as I like to say. And you don't know what door you're going to get your result. On my end, you're going to get it with every single door. But bottom line is, when you're dealing with debt, you have door number 1. That's the bank's plan. They want you to pay the full amortization, all the interest, then change and go to a new home or change that. And then you paid all that interest for 7 years and you'll start over. My goal is to start eliminating your debt more efficiently and sooner, getting you further down, building up your equity. Once you eliminate debt and have higher discretionary, you have the ability to become debt free and actually utilize that to restructure and actually create income. You have the ability to do that. Move yourself from door number 1 to door number 2 to create wealth in door number 3. Give us a call, 888-543-3980. That's 888-543-3980. Go to yourrealestatelife.com, our radio site. You can go to unitedforloans.com, FORloans.com, for our company site to get started. Again, call us, 888-543-3980. Write down that number. You're going to need it, 888-543-3980. We have an exciting program to come. I'm Michael Harris. More after the break.
Looking for a place to start? United for Loans is the place for you to start your refinance or purchase process today. 888-5433-980.
Yes, it's a little scary right now, but every crisis presents an opportunity. How many times have you looked back and said, why didn't I act? Do not try to navigate lending without a map. Tune in Sunday at 7 a.m. on K-Earth 101 with host and CEO Mike Harris of United Mortgage Corporation of America to discuss your real estate life. What should I do? Buy, refinance, sell, or hold? United Mortgage Corporation of America is open for business and ready to lend. Visit unitedforloans.com or call 888-543-3980.
Lending can be a bit confusing. Numbers can be tossed from one direction to another. How can you make it all stop? United Mortgage Corporation of America, unitedforloans.com can be your guide. Call directly at 888-5433-980 for what you need to know when financing a home of your dreams or commercial property. Call now at 888-5433-980 or visit at unitedforloans.com. That's 888-5433-980.
I done laid up and worked my rent. My kids all need brand new shoes.
Welcome back to Your Real Estate Life. It's your day in real estate radio. I'm Michael Harris, mortgage loan originator 233410 with United Mortgage Corporation of America, NMLS 3189. We're live on the radio here in Southern California. We're being broadcast on LinkedIn, but we're also being broadcast on our real estate channel on YouTube at Your Real Estate Life. Thank you for joining us. Go to yourrealestatelife.com or unitedforloans.com to get more information. We're on Fox Sports out here in Ventura on 1590 AM, 94.7 FM, KBTA, streaming at kvta.com, and on K-Earth 101, our Sunday morning audience at 7 a.m. The show will be broadcasting on that channel, and it can be streamed at kearth101.com. Now, love to have you subscribe on our YouTube channel. That would be awesome. And you could follow some videos, short videos that we do, as well as other items. But if you wanted to get the audio, it's going to be posted on our website shortly after the program. So you don't get the pretty face, but you get the voice. So you have that opportunity either way, and you can archive and look in LinkedIn and probably catch it as well from after it posts. But we were talking about discipline. We're talking about making decisions prior to having them kind of kick you in making them when you don't have pressure. It's having a calm approach to making sure you have access and you can sleep better at night. So it's equity, cash flow, and strategic planning. And, liquidity matters more than yield, really, in some cases, because it gives you that comfort. Now, you may have a yield, but you're kind of barking to get that yield every month and you don't have anything behind you. So we want to make sure you have breathing room during market volatility, options when income changes, and the ability to move quickly when opportunity appears. It's making sure you're aware of those future items and what that means and how much time you may have in order to reposition and do better. Now, there's a lot of common mistakes that people make. I mean, they treat equity as untouchable until a sale occurs, but it's idle money. It's not doing anything for you. It delays planning until choices are limited, and the choices are limited. I mean, you got to look to overcome that a little bit because you need to expand it, utilize money, untapped resources that are just stagnant, not doing better for you. Now, you have some equity advisors and planners from the mortgage side. That's what I do. Been doing it a long time. Now, I'm not security licensed. I do have a life, health, and disability license, and I'm not writing, I refer, but I have that knowledge. Now, some of those vehicles can be very, very helpful, becoming the bank, and you can do that. And we can kind of align those items together. But it's coordinating your housing with income, taxes, and retirement. It's making sure you're using them effectively. I mean, you're looking at planning your income, not isolating taxes. I mean, you got separately, retirement independently, housing last. I mean, you got all these different decisions, and it's a question of putting them together. It's aligning your mortgage structure with your income timing, whether you're monthly income or you're getting it commissioned and it's sporadic a little bit. The idea is using your equity to reduce your taxable withdrawals, especially if you're, again, taking out money and you're of age to do so. You want to plan for healthcare, longevity risk. You want to make sure your housing supports and not competes with your retirement. Sometimes you got the foot on the brake and the gas at the same time. Yeah, not the old days, hit the clutch and okay, got it. But you don't want to wait. Waiting is expensive. Yes, we want to lower your rate. Yes, we want to get you more cash flow. Yes, all that is true. But the cost of waiting is so, so very important. And on our website, I have an article regarding that at yourrealestatelife.com if you want to take a look to that, the hidden costs really of waiting. But you got to look at what's going on in the marketplace. What direction are we going? Are we meandering around? Are we going to go down short term? Where is it that you got to go? And the problem is when you hear it, sometimes it's too late. It's being ahead of the line, not in the middle or the end of the line. And it's not getting in line and not knowing what you're getting in line for. It's being informed. You know, prices may be moving, maybe up and down a little bit in every area, but by the most part, we've been fairly stable. But we're not going up 20%. Now, with the inflection of President Trump's edict of buying more mortgage-backed securities, we may hit these fives. You're seeing it, 5.999, 5.75. But again, depending on your points or fees or equity and your credit score, it's so, so very important. So part of the strategy is really evaluating where you are on credit, making sure you spread it out, that you're not at your limits, making sure that your payments are on time, especially your mortgage, and making sure that credit score is not fives, low sixes, high sixes, and maybe we do get in the sevens. And we've been able to get credit up during a loan process. Now, I can't commit to that, but that's what we try to do. We try to get the best results so you buy the money the cheapest way possible. And a lot of that is the strategy of moving your money correctly, earning every penny, every dollar, but also eliminating every penny, every dollar on the interest that you're paying. And part of that is using a cash flow optimization strategy. And that's the Money Max account. And we talk about it frequently on the program, whether you're an investor, first-time home buyer, or even a renter. We're able to show a very good way, just like you're driving in your car. You're doing that maybe right now. And you're trying to get to a destination. Maybe you're using a GPS, maybe you're not. Maybe you've gone there and you know what's going on. You got into traffic. Okay, great. But most of the time, people will put the address in and find out the ways to go and avoid traffic or unknown items that you don't see. We can do that now. Oh, back in the old days, we didn't do that. We pulled out that road map. We went in the glove compartment, pulled out the road map, hopefully pulled over and not put it on the dash. But we looked at point A to point B, take this, but we had no idea what was going on in the middle. No idea. Surprise. And then we were caught in a traffic jam. Then we got creative and things started going, and now we had better interactions, but we didn't update. And then unless you got on your computer and figured it out, okay, it got better, but okay, not as good as it is now. You go on your phone now, you go on your car even, and you're getting the best thing, and it's telling you where to go. You make a wrong turn, recalculate, and it's getting you back to your destination. Why not do that with your finances? Why not know exactly where every penny should go at the right time? Not just the minimum payment. That's easy. But knowing where and looking at your monthly monies and having them go strategically to the right place at the right time for the right reason. And not compromise your comfort level of your savings that you want in checking or savings or other, and not just, oh, gee, spend every dollar you got. But knowing that that money is going effectively forward to eliminate your interest footprint to become debt-free in as little as 1/3 or 1/2 the time without changing your lifestyle. As a mortgage banker, sounds counterproductive. Yes, I get loans for people. But my goal is to have you get a loan or gain a loan for a property, that multiple properties even, that you can then efficiently keep the money on your side of the ledger and maybe buy another property or do something else that you desire to do. So it looks at how much and how many dollars you have to pay. So I do get a budget. So we get everything monthly, as I said, quarterly, semi, and annually. We want to make sure we understand where you are financially, the money's coming in and the flow of the income, so we can actually evaluate that. But I talk about the mortgage statement, and it's looking at your mortgage statement to find out how much interest is actually being paid and understanding that you're paying a lot more than you think. It's not just that rate that you had, because you're paying a larger percentage on every single payment. So the Money Max account shifts the focus for what's my rate to how much interest I will pay. What is the amount of interest in total that I will pay? That's the focus, because that's what really matters. If you can get out of paying interest, then you're saving money. That distinction alone changes your outcome. Using the timing of your deposits, discretionary income, it's using all those items and looking at the daily flow. But you don't have to do that because you're going to have a perfect financial GPS that's smarter than you and me and everyone in the room, that doesn't talk back to you, that gives you perfect information. Your paycheck timing matters. Extra funds don't sit idle. They're earning a return. Small changes compound over time. Even irregular income, predictable income, bonuses, commissions, one-time deposits, no behavior is a problem. I'd like to show you how that works. Join us on Tuesday evening at 5 p.m. Tuesday evening at 5 p.m., you send me an email right now, interest@aheadformoney.com. You send me that email. I want to get you the information to join us on Tuesday evening at 5 p.m. here on the West Coast. Change the time for your market. We're going to be back. We got one more segment to go. I'm Michael Harris. We'll see you on the other side.
Your home purchase. Your landlord loves you. You're making their mortgage payment only for less than you pay for rent. 888-433-980.
What if I told you everything you understood to be true about money is not? If there was a program to eliminate most of your interest in your life and pay off all your debts, personal or business, even mortgages, in as little as 1/3 to 1/2 the normal time without refinancing and without changing your lifestyle, would you want to learn more? Call 888-543-3980 and request your information today, or email at interest@aheadformoney.com. That's interest@aheadformoney.com.
Welcome back to Your Real Estate Life. It's your day in real estate radio. I'm Michael Harris, President and CEO of United Mortgage Corporation of America. I've been doing lending now in my 39th year. Been on the radio 19 and a half years. 19 and a half years coming in on the weekends, talking to all of you. You can find us at various locations. We're going to be live running this program here on LinkedIn. We're also running it live on our YouTube channel. We're doing that, let's see, at Your Real Estate Life. And we're on Fox Sports here, Ventura, 1590 AM, 94.7 FM, KVTA. Actually, I don't know if I got that right, 94.7. I think it's a different number. But anyhow, we're going to be streaming at kvta.com and at KEarth 101, streaming at KEarth101.com. That's our Sunday morning audience at 7 a.m. So join us, subscribe if you choose on LinkedIn or also on YouTube. But write down our number. You're going to need it. 888-543-3980. That's 888-543-3980. Now, I got my cell phone going here, so I did thank everyone for joining us here on the channel, on our YouTube. We have various people that are coming in and out as they're traveling through their day. I know no one has the full 1 hour to set aside. I understand. But you can have your very own program. Give us a call, 888-543-3980. That's 888-543-3980. We were talking about the Money Max account prior to the break. We were talking about using it for your mortgage, your car, your credit cards, irregular income, bonuses. All these things happen. But most of the people get caught making minimum payments and you never get something paid off. It's like forever and forever because it just keeps going minimum, minimum, minimum. So, and it's not throwing darts at something and hoping you get it right. Now, throwing the darts is better than not throwing them at all. But I want you not to waste your dart. I want to make sure you maximize your result. If you're playing the game of golf, it's getting the ball closer to the hole versus on the in the water or in the sand or somewhere on the green that you got a long putt with a big break, and now you're three putting. I want to make sure you're in the hole as fast as possible. The Money Max account, it organizes how your dollars move so interest stops working against you. So against you, that's a problem. You need to be in control. We talked about that the whole program, being in control of your money, your equity, and using it to your advantage. And that's what this is about. Financing comes in because financing can shake that. But I'm not having you or don't want you to be in this loan for 30 years or go on an amortization that doesn't work effectively. And your money should work better for you without causing any discomfort or any delay in anything else you're doing. And I want to show you how that is. And you did not get that lesson. And you're doing it as everyone else had been doing. And you're spending interest that you don't need to spend. And I need that to stop. Part of that is joining us on Tuesday evening at 5 p.m. I could get you out a link. Send it to interest@aheadformoney.com. I'm going to answer myself, not AI, not even my team. I'm going to answer that. I'm going to get you out the link to access that. I'm going to get you out some information that will personalize. You'll have my calendar. And with that said, You can schedule a time with me prior or after, and then we can analyze where you are on your journey, whether you're looking to buy your first home, move up, move down, move sideways, whatever that case may be. Many of you have referred me to your children and your children's children. So we've done loans for fourth generation families, 3-generation families, many two, and of course, one is the easy one. But we've been referred to family, friends, and coworkers, and I value that tremendously, doing this now in my 39th year. So if you have anyone that you know who's looking to purchase a home, you have anyone you know that is complaining or having issues with debt, and regardless of the credit score, we can start that journey and help them move further and better. Sometimes a lot faster than it was for them to get into it. So I want to make sure we can do that. But give us a call, 888-543-3980. I kind of put together a couple of examples. A lot of our listeners, they get paid maybe the 1st or the 15th of the month. Normally it's a paycheck, kind of sits in your checking account, the bills go out, and you don't touch it. And that's maybe fine. But why not use a strategy that your income temporarily offsets principal, interest accrues on a lower balance, even short-term reductions save interest? I mean, you didn't get pay extra here. I mean, let's stop throwing the money somewhere else. I mean, I don't want you to change your spending habits. I just want you to put it better creatively to work, not causing you any time or hassle, but doing it better. Changing your timing. The math matters. Time matters, math changes, and that could be to your advantage. We had another individual who had a 3.25 mortgage with about 24 years left. They had a credit card of 9.99%. Now, most people attack the higher interest rate, but the Money Max account's going to take a look to that and find out which one is paying the higher amount of interest in dollars over the life or time of those balances. Now, the 999 sounds sexy to go after, but that's simple interest. 325, you started in 50 some odd percent interest. Depending on where you are with 24 years left, 6 years in, you might be paying more than 999 on that monthly. So it's going to look at a way creatively to go after those interest dollars over time. Where will the dollar today save the most amount of interest? So depending on where you are, it could be applied strategically to lower the rate, the loan term. It's going to go at what helps best. It's not guesswork. It's not throwing the darts, as I said. So we're going to make sure that's right. So it's some cases, it's pairing a home equity line of credit, which is simple interest. It's having that offset. Now, how far you are in your loan and how much interest you already paid and lost. Sometimes a home equity line of credit can help. Sometimes it could just leave you going sideways to where you could have gone with just the mortgage and the Money Max account. So we evaluate that. We're going to look at, maybe it's the home equity line is there for that emergencies that I talked about in our first section of the show. Maybe it's for renovations. Maybe it's for items that you can finance and then pay off very quickly or use it strategically to do so. So we look at a home equity line of credit as a planning instrument. And if you don't use it, it's there in case of emergency. So we look at that. We look at a home equity line of credit with a Money Max strategy. And we will go over that on Tuesday at 5 p.m. on a webinar. And I'd love to get you invited to that. Interest at aheadformoney.com, aheadformoney.com. Now, the income flowing through the system using the home equity line of credit with short-term liquidity on a rinse and repeat cycle can be very productive. But the Money Max account does not require you to have a home equity line of credit. It works with checking and savings. So if you have a checking and savings account, I'd like to show you how you may be able to pay off all your debt in a third or half the time without changing your lifestyle. Some people, it's 5 to 7 years. So it really, really matters. Truly matters. Now, rates are higher than they've been in recent years, but be straight with you, I told you, we are now at a 3-year low. A 3-year low. I see some 5s on the interest rates, so people are waiting, and they're, why are you waiting? Waiting's costing you money. So if we see a net tangible benefit and we're able to save money and it's not costing you to do, or you're recovering in a decent amount of time, because I don't like seeing 3 years, 4 years, 5 years. My gosh, that's too long. I don't want you spending the money today. Same way that people pay points on a loan. You're prepaying interest. So depending upon whose money that is, it makes a difference. Because if you're throwing all that money in, when are you going to get it back? So we want to take a look at that math as well and make sure it's feasible. So we want to have a compromise of such. Is it buying down the rate? Is it paying the points? Are you getting credit from the seller? And a lot of times that happens right now. But we're looking at that. Normally volatility is there. It's normal. But the less volatility, we're going to get that margin down. We're going to see mortgage rates get better regardless, because the margin of volatility decreases, allowing secondary and lending to get the rate a little bit lower. And we got about 0.25% there still, about 0.25%. So hopefully we can gain that. I'm looking to do that with our clients right now, but we're doing some no point, no fee, no cost loans, which means we're paying everything except them paying their own taxes, their own insurance, and their own per diem on their own loan, on their interest. And we're getting that done. So we're getting loans done in the low sixes, even the high fives. And we're lowering people from their 6.5, 6.875, their sevens. And we're helping others who are in a 3 or 4, and it's choking them because they don't have the flexibility with all their other debt. And we're actually able to lower their interest footprint, perhaps by raising the rate, because the blended rate is much better. And then we're able to attack, lower the interest volume faster and save them thousands of dollars. And most people don't see it. And I'm going to show you. I'm going to show you how that's done. When equity, cash flow, and timing work together, the money stops fighting itself. And many of you are fighting yourself. And that's what I'm trying to stop. You know, you got buyers, approval first, shopping second. I want to make sure you're pre-approved for what you're looking for. Not finding, hey, honey, we love this. And then not being able to qualify, or struggling and then losing the home because you can't get an offer together in time. So it's an approval first. And why we do that approval, we're going to evaluate credit and see if we can raise your score and save you some money. It's your money. It's not mine. It's yours. If I can get you lower cost, better rate because your credit score is higher, fantastic. And we can creatively put that together. Then you got your pre-approval and you can go shop. When you find the right home, we insert the address to the property, and a letter I will do goes out, and you're able to have that with your prospective offer. Now, you also need to check out your zip code where you're buying and making sure your homeowner's insurance is okay. If you're buying a townhome condo with an HOA, you need to make sure the health of the HOA, make sure they carry the adequate insurance, making sure there's no blocking there. Recently, I had a loan where they had to get additional insurance because they weren't financeable anymore. That's fun. So they went and did that, and we're going to be closing that loan. And now all of a sudden, there are referrals in that project because now they're not stagnant. They have things they can do. And all of a sudden, that helped their property value. They're not sitting here landlocked. So these things matter. Planning matters. If you're an investor, is choosing the state that your cash flow is right, whether we're doing a debt service coverage ratio loan, we're looking at what your exit strategy is. Are you long-term, short-term, flipping the property, cash flow first? What is it that you're looking to achieve? What's your motive? What are you trying to do? We look at retirees and pre-retirees. We look at housing aligned with your income needs, equity utilized intentionally. Whether we're doing reverse mortgages to eliminate your payment, to then reduce other debt, or gain monthly distribution, cash flow, utilizing a reverse first or second mortgage is possible. A reverse can also be used as a purchase loan. So when you sell a property, have money coming out, you put that back in on the reverse. Now you have access and you have no mortgage payment. So we're doing that with many. Some of those are even able to transfer their tax rate, which was then still low. Depending on your state, the tax rate can travel with you. So these are things that we talk about. But I handle reverse mortgages in 5 states: California, Colorado, Montana, Texas, and the state of Washington. For others, I'd refer someone else, and I can do that. 888-543-3980. That's 888-543-3980. Now, you can go to our websites, but you can have your very own program by picking up the phone. Now, we're on YouTube at Your Real Estate Life. We're also on LinkedIn, and you can go back in our archives and find that, and go to my site there and pull up past programs and other videos. And you could do that also on YouTube. We're going to be posting a little bit more shorts, 1 minute, 2 minute, 3 minute pointer items going out on the various topics of this program and others. So we'll be doing that a little bit more. But tell your friends about it. I'm here to help save you money. I'm not here to cost you money. when you have a need, or maybe a need that you didn't know you had because you're spending too much, I want to help point that out. I want to be the good cop on your team. I want to make sure I'm there in your corner, making sure you're not spending too much. Many individuals will charge you when they feel they can get away with it. I don't want that to be you. You know, when you go buy an automobile or other items and you think you did really well and you got people doing chest pumps in the back, and well, you're not understanding. There was too much money somewhere else that you didn't get that perhaps you could have got. And recently I just went on a trip, and it's the same thing when you have goods and services and they have a price on it, and you say no, and then all of a sudden the price goes down, and then now you're in a negotiation. Okay, well, great. How much can they get out of you, right? When are you going to, who's going to blink first and who's going to stop? And then you start walking away and they go, oh, sir, and all of a sudden the price is 70% from where it started. You know, you want to make sure somebody's not overcharging to just and bring it down to what it should be when pressure is there, when they feel they're losing you. When I price a loan, I'm pricing it from down and dirty. I want to make sure I get you the best result now. It's not, oh gosh, well, I can bring it down to that. Well, that means I was taking advantage of you. And you should not be taken advantage of, especially when it's the largest decision you have, your home. Whether you're buying an investment property, whether you're going forward or in reverse, whatever it is, you need to know it's being done right and not be suspect of the people helping you. You're only as good as your offensive line protecting you against the defense. Apropos, when we're talking about football playoffs right now, right? A lot of good games. A couple games. But bottom line is, if one defensive player comes in and you're the quarterback, you're a scrambling quarterback. So your team cannot let you down. And that's all the professionals in front of you. And if you have a team, I would love to be part of it. I would also like to help them with their clients so they can show them how to save money to maybe afford the things that are helping utilizing their services. We've utilized the Money Max account for investors who have freed up more additional down payment and money to buy more doors, helping a realtor. Those realtors get help having investors buy more property. The realtor goes back to their past clients, residential clients, and they're paying off debt sooner. They're able to move up or add to their portfolio. Insurance agents, financial planners, freeing up and paying off debt sooner to create wealth can help in that. Other mortgage loan professionals, I'm not trying to take your clients. They're your clients. I want to show you how you can retain them as clients and get more referral. Call me right now, 888-543-3980. That's 888-543-3980. Tuesday night is for our consumers to learn more about the Money Max program. I invite everyone to come to that. I will get you out an invite. Send me an email, interest@aheadformoney.com. I have your email. Throw a phone number, throw a name. I'll get you out that invite. For professionals, I'd love you to do the same, but we can set up a separate calendar, send your information, and I'll have that up there and we can talk. But I'd like to invite you also to a Thursday night meeting, which is more of an opportunity meeting where it talks about how it can help you in the professional state as well. So send it to the same place, interest@aheadformoney.com. This is something that I do along with what I do in lending. It's not my primary, but I'd like to see you there. You've been listening to Your Real Estate Life. I'm Michael Harris, mortgage loan originator, 233-1410, United Mortgage Corporation of America. Until next week, what kind of loan do you have?
Corporation of America, UnitedForLoans.com will continue to take your calls after the program. Call now to start your home loan process at 888-5433-980.
You know, I just alluded to it. You know, you got football going on, you got all the sports happening. It's an exciting time. I love that. College football, my wife's team didn't quite make it, Ohio State. I understand, but Indiana's doing fantastic. So we're watching that, and we saw the game doing that on television. And we got a big game going on, Indiana versus Miami. But we're watching that. We're watching the pros. We got the various professional teams across the country playing. And, of course, our home team here in California, the Rams. Some people still love them. Some people, no, they're the naysayers. But it is what it is. And you got the Bay Area teams playing as well. So a lot going on. We'll talk to you soon. Give us a call, 888-543-3980. We'll talk to you next week.